Hey guys, Chris from Adapt Tuition here, and in this video I'm going to be showing you how to prepare the balance sheet for limited liability companies. If you are brand new to LLCs and you know nothing about them, then I would strongly suggest that you click on this card up here or the link in the description below, which will carry you to my playlist, which shows you 2 previous videos. How to prepare the journal entries to record the issue of shares and debentures for limited companies, and how to do appropriation accounts for companies as well. That way, you will get accustomed to the terminology and some of the theory behind LLCs, so the material in this video won't seem too alien to you. Also, I'm going to be using 2 past paper questions to help me in this video. I'm going to be doing 2006 May, which is priced Rite Limited, and the question from 2019, which had a statement of changes in equity in it, which a lot of people seem to be confused by. And honestly, there's a question as to whether or not it's on the syllabus. Okay, so without further ado, let's get into it. Okay, so let's take a read of the question. So we're dealing with the balance sheet of Rite Limited. It has several errors in the way it is presented. Redraft the balance sheet using the vertical style, ensuring that the sections of the balance sheet are clearly marked with appropriate headings. So you might take a look at this balance sheet and wonder, what is that? How is that a balance sheet? And you may also notice the use of the word vertical, the capitalization and bolding of the word vertical in the first paragraph. There used to be horizontal formats to the financial statements, both the income statement, which was of course called the trading and profit and loss account, and the balance sheet, which we now know as the statement of financial position. So as you can see here, we have assets on the left-hand side and liabilities and capital on the right-hand side. And if there were totals there, they should balance, because the balance sheet was so called because it was kind of likened to a scale. I'm not sure how many of you may actually know what a scale is. You think that takes your weight? There used to be an old version where you had almost like a seesaw, and if 2 people on the seesaw and they weigh the same, the seesaw will kind of stay where it is. So that's what a balance sheet, that's why it was called a balance sheet, because things were supposed to balance. Now, of course, we do not use the horizontal formats anymore. We use the vertical formats. And let's take a look and see what's going on with this one. So let's take a look on the left-hand side. Assets. So we're seeing a list of assets in no specific order. We see stock followed by land and buildings, less depreciation, debtors less provision for bad debts, cash in hand, investments and equipment, less depreciation, cash at bank, motor vehicles, less depreciation. So it's kind of all over the place. We don't have any clear distinction between current and non-current assets, nor is there any particular order in which the assets are listed. So we are supposed to know the order of liquidity and the order of permanence. I will be using the order of permanence. Now, everything there is an asset. Let's take a look on the right-hand side. Liabilities. Creditors, fine. 6% debentures, no problem. Proposed ordinary dividend. Okay, so the directors declared the dividend. They haven't yet paid it. I'm fine with that being there, but once again, there's no classification, current or non-current. So we need to go and fix that. Authorized share capital. So this is the legal maximum value and, well, number of shares the company is allowed to issue. So we have 20,000 7% preference shares of $1 each. 125,000 ordinary shares of $1 each, and the general reserve, but that's not supposed to be under authorized share capital. That's not share capital, that's a reserve, so that shouldn't be there. So that's one of the errors they're talking about. Issued share capital. So issued share capital is different from ordinary, authorized, sorry, because issued is what the company has actually, I guess you could say, sold to the public or to its investors, to the owners, to actually raise capital. Authorized share capital is just there for informational purposes only. I do not know if informational is a word, but I'm going to use it. Okay? So we will include authorized share capital just for the sake of, once again, information, but it will not form or affect any part of the calculation in the balance sheet. The issued share capital, so we issued all 20,000 7% preference shares. We've issued 90,000 ordinary shares out of the 125 authorized. We have a proposed preference dividend. That's not share capital. That's a proposed dividend. That should be up with the liabilities. We also have a profit and loss account. Well, that's the retained earnings or retained profits. It could also be called the profit and loss account, profit and loss reserve. So that's a reserve. So it shouldn't be under issued share capital. And debenture interest owing. So debentures, as you know, are a liability, a way for an entity to raise money. And the interest, just like any loan, they attract interest, and the interest is an expense. And if it's not paid, it's owing, and if it's owing, it's a liability. So we have some work to do here. Now I know my usual style when I create questions, you're going to see like a kind of question on top and the answer below, and I scroll down and these things, right? So with this, I'm going to do a slightly different approach to it. I'm going to put the question on the left-hand side, and the answer on the right hand side. So what I will do is I'll put a poll card up there, maybe not now, maybe a bit later, so you all will tell me if you're able to see things properly, because I know a lot of you guys watch my videos on your phone, and of course phones are smaller than tablets, and most times smaller than actual computers, laptops, or actual screens. So I don't want to make things that you guys can't see. So this is a kind of a test. I've done some of this before, but I want you guys to tell me in the comments, and hopefully I remember to put the poll, right? And you will tell me if you are able to see clearly, or if not, I will have to find a different way to do this going forward. So let's put this question, sorry, I didn't click on it, on that side. So I'm not going to zoom out, I'm going to leave. We're going to work on the assets alone for now. And what I want to do is I want to bring the answer up on the other side here. So we're going to see if this works, right? So of course we head up first. Always head up your questions, right? Balance sheet, price Rite Limited, name of the entity, followed by statement of financial positions. That's the term we use now as opposed to balance sheet. As at December 31st, 2005, just in case you wanted to see that, it's right there. Right, so let's take a look through this list of assets and see which ones are non-current. So the first one I'm seeing as non-current is the land and buildings. So we have 150 less depreciation of 30, giving us 120 as net book value. Debtors and provision for bad debts. So that's current, okay? Cash in hand, current investments. We'll come back to investments. That has a question mark on it for me. Equipment, 15,000 less depreciation, right? So of course the depreciation is a dead giveaway. Only non-current assets are depreciated. Next we have, no, not cash in bank, motor vehicles, less depreciation, 3750. Now, like I said, investments. Now investments is like if you buy a piece of the ownership of another company, or you put your money in the stock exchange, the stock market, or you buy some sort of investment vehicle, a mutual fund, certified deposit, what else you have? You have repurchase agreements, secured investment certificates, you have all sorts of things. Some investments are short-term, so they will therefore go under the current asset section, and some investments are not short-term, they are long-term, which means they'll go in non-current section. Now, we have no context for whether this investment item is current or non-current. The dollar value does not dictate whether it should be current or non-current. That's not necessarily a good way to tell, because there are some non-current assets which may not be as expensive as other non-current assets. We may have bought a big portion of that investment and sold off some. We may have just bought a small portion to see what happens to the value to buy more later. So I'm going to put this as a non-current asset. You can choose to put it as a current asset. I'm fine with that. If they don't specify, as far as I'm concerned, they can't penalize you. But once again, that's my opinion. So investments there. Let's total up current, the non-current assets, sorry. Right, so current assets now. Let's head that up. So we started at the top. Stock, 21.5. Debtors minus provision for bad debts. So they give us these figures straight off the bat. So we have no calculation to do per se, it's just to plug them in. Do we have any prepaid expenses or accrued revenues? No. We have cash at bank and cash in hand. Totaling current assets gives us 79,475. Now, just by the way, I do my balance sheets as well, the working capital method, where you have assets minus liabilities, and more specifically, current assets minus current liabilities. I know that there are different ways to do balance sheets, and I've heard that some teachers have said that the way I do it is the junior way, or the not proper way to do it. I don't know about that. I acknowledge the usefulness of the different methods, and it is good to know how to prepare balance sheets using different formats. I just use this one because it's what I'm accustomed to. If you use a different one, that's fine. We will talk about that a bit later, all right? So let's talk about current liabilities. So it means I'm going to have to scroll across a bit. All right, so we know creditors for sure is a current liability. The debentures are non-current, so we're going to leave that for after. Proposed ordinary dividend, 9,000, and we went down to the issued capital section because we had two items that should not have been there. The proposed preference dividend of 700 and the debenture interest owing of 600. Total current liabilities, 35,300, giving us net working capital of 44,175. Net working capital is the difference between current assets and current liabilities. And we're going to add that to our non-current asset total to give us that figure there. From which, of course, we're going to subtract the non-current liabilities, the debentures of 20,000, to give us net assets. Assets minus liabilities equal to net assets, or capital. So 164,925. Now I'm going to scroll down. So if you need to pause and take any notes, pause now. So I'm going to leave just that figure on top there. And what we are going to do is we are going to explore the share capital and reserve section. And we're going to start with the share capital. So the authorized share capital is the 20,000, the ordinary shares. I have 125,000 ordinary shares of $1 each. The 20,000 7% preference shares at $1 each as well. So total authorized capital is 145,000. Issued share capital, we have ordinary of 90,000. Then we have the preference shares 20,000, giving us a total of 110. The reserves now, we have a general reserve. We have a general reserve? Yeah, 31,000. Then we have the profit and loss account, which is the balance in the, well, profit and loss reserve, retained earnings. That's what I'm going to say, retained earnings. And if we add those two together, guess what we get? 54,925, which when added to 110 above, gives us 164,925. And guess what happens there? That balances with this figure here. And I'm hearing some of y'all already, eh? You're asking, well, Chris, what about this 145? If you remember a bit earlier in the video, I did say that the authorized share capital section does not affect the calculation in the balance sheet, the totaling. It is simply there to provide the information to any of the readers of the financial statements as to the legal maximum number of shares, ordinary and preference, that the company is permitted to issue. So you can use that to gain some context. So for example, we know the company cannot issue any more preference shares because the issued value is equal to the authorized value. However, the issued ordinary shares is 90, whereas the authorized is 125, which means that we still have some capital to raise via ordinary shares. Okay, so if you guys have any questions about this first question, 2006 price right, please leave them in the comments below. And with that, I want to go on to the 2019 question. Okay guys, so this is the 2019 question. We're going to take a little read through. So it says share capital issued. Sorry, let me scroll up a little bit so you guys have a little context here. Right, so the following is an extract from the books of Freight Express Company Limited, taken on December 31st, 2018. Share capital issued. Ordinary shares at $1 each, $150,000 worth. 8% preference shares at $2 each, $100,000 worth. Retained profits for the year after taxation, $186,000. General reserve, $95,000. Retained profits from the previous year, $124,000. So, with the exception of the second item, everything there seems to be balances brought forward, right? The opening capital balances, the opening general reserve balance, and the current balance in the retained profits account. And of course, we have retained profits for the current year as well. So what's going to happen? Let's take a read again. Board of Directors propose the following. 50,000 is to be transferred to the general reserve. Okay, sounds like an appropriation account so far, right? Dividends, 20% on ordinary shares, preference dividends to be settled in full. All right, easy stuff. In the space provided, draw up a statement of changes in equity for the Freight Express Company Limited for the year ended 31st December 2018. Right, so this was a question that threw off quite a number of people in 2019, including a number of my students. Now the thing is, to my knowledge, this actually is not on the syllabus, and I'm going to pull up your syllabus in a couple of seconds. I know what it is, but I've never taught it because all we've had to teach for LLCs at the CSEC level were income statements with appropriation accounts and balance sheets, statements of financial position. The statement of changes in equity is sort of like an appropriation account, but not exactly the same, because think about the word equity. What does it mean? It means ownership. Who are the owners of an LLC? The shareholders. So if you're talking about changes in equity, are we talking about issues of shares? Well, yeah, that is one way equity can change. But we've never seen issues of shares in the appropriation account because appropriations are amounts of profit set aside for specific purposes or paid to shareholders as dividends. So it's not an appropriation account we're doing. It is a different statement. But what's the format? How does it look? Interestingly enough, if we scroll down a bit, they give you this format, which sort of looks like the format for an appropriation account. You have your lines on top of a heading. Now, always head up your statements. Otherwise, you will lose that mark. You will not get the mark you can get. You have a couple of things for your dollar signs, and we have about 3, 6, 9, 10 lines for information. So, I mean, that could fit, because I mean, if you think about it from the perspective of an appropriation account, you have your current retained earnings, you have your retained profits from the previous year as well, and then you're going to add that together to get that figure, right? And then you have 3 appropriations. So we're already on about 7 lines, 8 for the subtotal and 9 for the final figure. All right, but before we jump into, like I said, I wanted to show you guys your syllabus. Now, this syllabus is available at cxc-store.org. You can do a quick Google search. It is free. The latest one, as of the date of this video, which is February the 18th, 2020, the latest revision was done in November 2019, but there was a revision to the revision that was done in 2016, which were the teaching on which started in September 2017 for first exam in 2019, right? So they changed a couple of wordings, because I do remember, so you're seeing this, it says Section 9, accounting for limited liability companies, cooperatives, and non-profit organizations. I will just scroll up so you guys can see everything else that they had here, all right? So same Section 9, identify essential features of these companies, identify types of limited companies, outline the advantages, disadvantages, and you guys could pause and take a read just to make sure we don't miss out anything or any mention of the statement of changes in equity. Describe various methods of raising capital available to limited companies and cooperatives. Identify the various types of shares. Prepare journal entries to record issue of shares. Once again, you can check out my video. I have a link in the description below. Calculate dividend payments to various types of shares. We've seen that already. Appropriate profits. Once again, check out my link in the description below for the appropriation account. And number 9, prepare the final accounts for limited companies. And just to analyze performance using ratios, receipts and payments account. The receipts and payments account was one of my first videos from 2019. You can take a look. You have to scroll a bit down, or just do a search on YouTube, which is adaptation receipts and payments account. But here, and you're seeing I have something highlighted, final accounts of limited liability companies. What are final accounts? Income statement, balance sheet. You also have something called the cash flow statement, which is done in Form 6, Unit 1, CAPE accounting. And you also do have, yes, the statement of changes in equity, but it is not explicitly stated here. And I think for the sake of clarity, it should be stated if you all have to know that. Otherwise, we as teachers could be teaching your stuff or not teaching you stuff we should, and in some cases teaching your stuff we shouldn't. Because I know of teachers who still teach incomplete records and the other aspects of non-profit organizations and to students. Now, don't get me wrong, I love those topics. I wish they were still in the syllabus, and some of the things that are currently here were not. But all of the information is valuable. But we don't have, in my opinion, we don't have to teach extra stuff. It would help you, but time just doesn't permit, in my opinion. In my humble opinion. I could stand corrected very easily, okay? Anyhow, but the point of this little rant here was just to say that statement of changes in equity, I am not seeing it here. It could be meant to be understood as part of this, but then cash flow statements are also part of the final accounts. So why should we do a statement of changes in equity and not a cash flow statement? Just because the cash flow statement is explicitly stated in the Form 6 syllabus? Well, guess what else is explicitly stated there? Statement of changes in equity. Anyhow, let's get to the question, because I don't want to take up too much more of your time. But don't go and argue with the teachers, but you could mention to them certain aspects of the syllabus that you've seen, right? Nonetheless, it is better to know how to do something and not have to do it than to have to know how to do it and not be able to do it. Did I say that right? I'm not even sure. Okay, so let's see my proposed approach to this. So let's say you were in that exam last year, which I know some of my students were, and you saw this thing, statement of changes in equity. The first thing you need to do to get your marks is to head up your statement. Don't let this throw you, right? You can get at least 1 mark, get your mark. So Freight Express Company Limited, statement of changes in equity for the year ended 31st December 2018, $signs. So let's say you approach this from the perspective of doing what you know how to do, which is an appropriation account. So you might start with your retained profits for the year after taxation, adding your retained profits from the previous year to get the total profits available for distribution. Then you would minus your appropriations, which would be the preference dividend, the ordinary dividend, and the transfer to the general reserve, giving us 88,000 in total, leaving us with 222,000 retained profits carried forward the next year. 4, 5, 6, 7, 8, 9. So that there would fit almost exactly inside of the space allotted. You can count the lines. All right. Now, I have an alternative presentation prepped. The thing about this alternative presentation is that it takes up way more space than you have available in that space on the question paper there. But I'm just going to run through it very briefly, right? So head up, Freight Express Company Limited, statement of change in equity for the end, Okay, now I'm basing this on a format for something from Cape Accounting called the IFRS for SMEs, International Financial Reporting Standards for Small and Medium-Sized Entities, Section 6, the statement of changes in equity and retained earnings. So what they do, now that format was way more elaborate and definitely could not fit into what you had here. But I'm just going to show you a suggested format. And once again, there is no one right format. There are suggested formats, but there is certain information that must go in that statement, right? Once you can put it and it's shown clearly and it's understandable, you should be fine. There's no one right format. Okay, so equity at start. So your equity are your shareholders' contributions, so your share capital. And don't forget, the shareholders are entitled to the profits. So the reserves are also part of your equity. So equity at start, ordinary shares, preference shares, retained profits, right? General reserve. Okay. Total equity at start, 469. So do we have any increases? Well, the profit, yeah, and we made a transfer to the general reserve. Now, that one is kind of weird because I mean, well, how come? I mean, that came from profit. I'm gonna minus it below, so you'll see. Just follow me for a second, right? 236, 705. If we add that to the 469, decreases. So we had transfer to general reserve and the two dividends, same 88, giving us 617. All right. Now, once again, this will not fit in the space you have there. Right, and of course, I'm hearing any questions already. Chris, you're sure general reserve balance is part of equity? Because I mean, it says share capital and reserves, or equity and reserves. So the case could be made that those reserves, that reserve stuff shouldn't even be there at all. All right, but retained profits is part of your equity, and retained profits is a reserve, right? But that doesn't mean all reserves are equity. So something to think about and to research. Okay, now the other part to this question, let me find it here. Right, so the authorized share capital of Freight Express Company Limited is as follows. $250,000 ordinary shares at $1 each, 100,000 8% preference shares at $2 each. So in the space provided below, use all relevant data previously given to prepare an extract of the statement of financial position, balance sheet, to show only the equity section for Freight Express Company Limited as at 31st December 2018. Okay, so they want a balance sheet extract, which will fit in this area here, which is very similar to the format they gave you for the statement of changes in equity. So let's put this back on this side again. So this is the authorized share capital, and we saw in the previous question that that is just included for informational purposes only. I'm going to scroll down now. Scroll down this side here. Oops, what is going on? I don't know. All right, cool. So let's head up. So Freight Express Company Limited statement of financial position extract as at 31st December 2018. Okay, so we're going to start with the authorized share capital. 250,000 ordinary shares at $1 each, 100,000 8% preference shares at $2 each, totaling $450. Now we have issued share capital. So let's just go back across here. Let's scroll up and scroll across. Issued share capital, so we have that outlined for us. The ordinary shares 150 in total, preference shares 100 in total, subtotal 250. Reserves, so the general reserve started off at 95, but we transferred 50 more to it, which means 145 is the new total. And the retained profits, so you're going to see a little calculation here, which you would actually already have that figure if you did your appropriation account as your statement of changes in equity. So you would have that figure already. So we have the 222 there, giving us 367, and if we add that these two figures, remember we're not adding this figure here. That is strictly for information purposes. It does not form or affect your form part of or affect your calculations in your balance sheet. 617, total share capital and reserve, and that happens to match with this figure here, which I got from my, well, other version of the statement of changes in equity. Okay, so guys, that is really it for this video. Now, of course, I'm sure many of you might have questions about certain aspects, especially of the 2019 question. I want you to put those questions in the comments below, and especially with regard to have you all, I'm going to put a poll up there now, have you all been taught how to do a statement of changes in equity? And if so, what I want you guys to do, if you guys have Instagram, I'm pretty sure most of you guys do, take a picture of your format, put it on Instagram and tag me, right? Adapt Tuition. You can find me on Instagram as well. I'm trying to be a bit more active there. All right, so if you tag me, we will get a bit of a discussion going, because I really find it unfair that a lot of students don't have access to a lot of important information. I mean, they do have teachers, but a lot of times kids, the way teachers bring things across, kids don't understand. And this is not a knock against teachers in public schools or private schools, right, guys? I was a teacher myself in a public school for 4.5 years, and trying to teach a class of 30-something odd kids, in addition to, well, multiple classes of 30-something odd kids, in addition to correcting SBAs and setting tests, filling out progress reports, and then all the extracurricular stuff I was in charge of, that takes a toll. And I wasn't at that time married or had any kids. And they had teachers who were married and had multiple kids, right? So much less, maybe I just don't know how to budget my time or manage my time, but I think I have a little bit of a hand on it, right? I wouldn't have gotten so far in life if I didn't. So yeah, but sorry, I'm ranting, but what I'm trying to say here is that I think the syllabus really needs to be clear on what you guys are supposed to know, and especially with the SBAs. I've heard that you guys have to do SBAs. The good news is you only have to do one SBA if you're doing multiple business subjects. But the bad news is some schools think you're supposed to combine SBAs, like you're supposed to have a POA/POB SBA or Econ/POA SBA. And one school in particular, the school I taught at and I went to, said that that's not the approach that they are taking. So I'm going to put a next poll up there now. If you guys are doing an SBA, are you doing an SBA for one subject? So you're doing multiple business subjects. Are you doing one SBA for one of these subjects, as in only POA, only POB, only Econ? Or are you doing hybrid SBAs, like Econ with a POA element or POA with a POB element? Right? I want to know. I want to find out, and I want us to make a little noise so CXC will clarify these things in some way, shape, or form, because I know a lot of people don't know. And teachers are doing their best and trying to guide you guys along, and it's just frustrating the process, to be honest. Anyhow, I hope I haven't offended anyone by speaking my mind. I want this process, this learning process, to be enjoyable. It really is supposed to be enjoyable for everybody, but I know that that's not how it is for a lot of people, and that's unfortunate. And I wish different for you guys. I wish better for you guys. All right, guys, so I'm not going to go to my usual outro spot today. I'm going to just do my outro right here, and that was part of it. Once again, if you guys have any questions, wait, I'm not seeing, I have a little thing going on my head here. What is this? Sorry. Right. You can't unsee it now, right? All right, guys, so once again, if you have any questions, please feel free to leave them in the comments below. Put up your pictures on Instagram and tag me with your different formats or whatever the case is. And once again, you can do anything you want to do. You can be anything you want to be if you have the correct mindset, if you believe that you can do it, right, guys? I'm reading a book now. You'll see some of these posts on Instagram, right? Mathematical mindsets. I teach math and add math as well, and I'm learning a lot. There's an online course that a lot of blow mind stuff. The way we teach maths is just horrendous. Anyhow, but yeah, this is where I learned about mindset from. You have to believe you can do these things. That's where it starts, right? And along the way, like I've always said, no process is perfect. You are human. You are going to make mistakes, and that's okay, right? There is research that says that your brain grows when you make mistakes. Find this book somewhere. Google it. Google Joe Bowler, Mathematical Mindsets on YouTube. Listen to what she says about mindset. Google Carol Dweck. Right? Your brain, when it is struggling, that's when it is growing, right? So don't run away from mistakes. We vilify mistakes, and that in itself is that's a mistake. We should not do that. All right? Mistakes are your friend, and you can learn from your friends. Okay, and guys, like I said, even what you're doing, you're practicing, you're making your mistakes, but you're still not making any progress, then you're gonna need to try a different approach to what you're doing. You need to adapt, because change is the only constant. All right, guys, thank you so much for watching. Don't forget to like, share, and subscribe, and I will see you next time.